Hit it.
It's Friday, June 6, 2025, episode 265. I'm Patrick Ceresna.
And I'm Kevin Muir, and it's great to be back. This week we have no guest as Patrick and I just get caught up on markets and shoot the shit.
Absolutely. And we might even this time drink some beers along the way. Danny, what are me and you drinking?
Beer Moretti, because we are in. Where
Italy.
are we? There we go.
We're in Maranello. We're right outside of the Ferrari headquarters out here in Italy. We're about to do a tour and test drive some Ferraris. It's going to be pretty sick.
Patrick, you know what? You're trying to seem more relatable, and you're just sounding more and more like a D-bag. All right, save that for the end of the show. Okay, nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include Musk market mayhem, the SpaceX speculation syndrome, and the recessionary reflex disorder.
Oh boy, do I have that reflex. It's
all right. So Patrick, it's been a long time, buddy.
Absolutely. It's so great to have you back.
I get updates from your members telling me what you're doing though. Like
really?
Oh yeah, I got the things. Patrick's all bullish on oil and stuff. I hear about your escapades in the market through all your members.
Absolutely.
You know what the problem is? I think they're looking for a reason to shoot it down, and they're counting on me.
Absolutely. They're counting on you to be the voice of reason for my madness. Anyway,
all right.
Let's quickly touch on the one thing that we have to talk about quickly is just the jobs numbers came out this morning, and no sign of a recession yet. Just came right in line, beat a little bit, but I mean overall, I would call it something much more down the center. No big reactions. Market obviously continued to plug a little bit higher on that news. Anything that you want to take away from that?
Well, I guess there was a little bit of some revisions that ended up being a little weaker than expected. And that's what some of the economic bears were hanging their hat on. But the reality, as you point out, was that the market was taking it as good news. And I think the really big thing was that Musk and Trump stopped fighting for 10 minutes and the market took off.
No, fantastic. No. But let's talk about the things that I'm watching for the next couple weeks. Next week, we have inflation, CPI and PPI numbers. And obviously, the Fed has more or less been anchoring, holding off because of this imminent inflation risks. How do you think? I think these numbers come in just in line. I'm not expecting there to be any
one of
big
these
boost.
days, Patrick, don't you think we're going to have to get some of this tariff stuff coming through? So it's not like there's no price increases. And I there's examples of things like one of my good pals sent me something about his vitamins or supplements or something that he has on auto renew on the Amazon, and they show the difference in change. And it's up like 40-50% or something like that. I can't remember the exact number, but it's higher.
Yeah, but okay, for instance, core CPI is expected to come in at 0.3. So the forecast, they're already anticipating, and the PPI, which was a negative number last time, they're also expecting 0.3. So the thing is the market is already anticipating a little bit of hotness in the numbers. So the question is it going to be hotter than what the market is already expecting to be hot? Is that?
You know, I'm still getting caught up a little bit, so I'm not really in tune with whether this will be the one. I'm not sure. Maybe this isn't the one, but one of these days, I think we are going to have a hot CPI that scares the market. And then the real question will be, how does everything react to it? Like, is that actually really what the market?
Do you really think, though, that the market is going to react to a hot CPI when everyone knows that tariffs are already going to create a hot CPI? It's like it's the worst kept secret. Like everyone knows it's coming.
Yeah, not disagreeing. I'm not sure. I'm still struggling with how the market takes it because, to some extent, let's face it, it sounds like based upon the kind of few Fed interviews that I've read lately. Looks like they're going to look through any sort of increase from the tariffs. and they're not going to go and chase it higher with higher rates. And given that, therefore, is there a reason to do anything when, as you say, the CPI comes in hotter? Not sure. I guess maybe I might say that the bond market might have more problems. And if the bond market has problems, does that eventually cause issues in the stock market? And so that's, if there is a mechanism upon which that a hot CPI causes the stock market to sell off, it'll be because the bond market has, some indigestion.
Right. So the other thing to watch, and then we'll get to some charts, is before we do the next episode on June 18th, we're going to have the FOMC. Not expected to move.
Right.
But will the language of Powell shift? Obviously, we're going to get these inflation numbers, which is something that they've been anticipating. And will we still get I wouldn't want to say, would you call Powell's current stance a bit hawkish? The fact that they're not willing to move, or do you call it more neutral?
I guess, I don't know. It depends on what you think is happening with the underlying economy. Because on the one hand, you could say that their fact that they're not willing to move is hawkish, meaning that if you have a belief that the economy is rolling over, then you might say that is a hawkish stance. At the same time, let's face it, inflation's still decently hot, and they're not raising rates. And not only that, they're telling you that if they see that, they're not going to go and chase it higher. So it's dovish. Like, this is the real dilemma the Fed's in, and it's a real pickle. Like, I wouldn't want to be them, because whatever he decides, it's Trump's going to hate him. Market will be mad at him. He's going to get told he can't putt again. Like, nothing's worse for a golfer than that. It's like getting told you can't putt. And I think it's coming.
There you go. All right, let's talk some charts. All right, so let's start off here with the S&P 500, and a green candle up today. And so we have a market that's still in bull trend. We had basically almost 2 months of straight upside. There was a brief correction that happened in May that lasted about 3 days, but overall the market's been going higher. But the one thing that is very evident is that the upside momentum has started to dissipate. Like, the market is more of a dead crawl than an upside momentum, and you would have to believe that that's because we're almost 1,000 points off of the low in a couple months. There's a point where the market has already just gone too far too quickly, and so from a technical perspective, my positioning remains that the overhead resistance of the previous highs is going to be a pretty hard obstacle for the bulls to beat on the first go. Like, even if the market gets up to there, with just the fact that it's been running for 2 months, I think that the market at some stage in the next couple hundred points is going to struggle to beat and then consolidate. And what that consolidation looks like will be dependent on data, like, for instance, how the July earnings are going to be coming out, and all sorts of other variables that are going to be going into the summer, that could drive, what kind of magnitude of a correction it could be. But I just at this moment don't think that there's a lot of upside, but no reason for the market to sell off. And so it's kind of a dead crawl into overhead resistance where we're just in a holding pattern, almost waiting for something meaningful to present itself to drive the next trend.
So I'm going to be a terrible guest here, and I'm going to say that I agree with you, Patrick. But I'm going to use a slightly different approach, though. I really think that increasingly the option market drives the underlying fundamentals because the option market is so large, and we're in a situation right now where the that JP Morgan upper strike, the one that they write, we're actually above that. It's 59.05. And I think that's part of the reason why the market is stalling here, is that there's a lot of overhead supply based upon the fact that the market makers are long an extreme amount of gamma. So what does that mean? That means as the market rallies, they sell more into the rally.
Yeah.
Now, the one thing, though, that you might say, well, that means you're bearish. And I go, well, no, because the reality is, because they're long so much gamma, and because we're actually above that strike, if we were to get some bad news and go back down, they would be there to catch it. they're going to be buying it back on the way back down. So they're going to be pinning it to 59.05. So in the absence of any other information, I'm actually believe that we spend the next month around here. And if you made me guess where we end up the end of June, it's 59.05 or something like that. And I think you saw that yesterday. There was lots of reasons for the stock market to be down. And yet that was met with some buying, and here we are back up at the highs. So the way I'm trading it is I'm not getting too bullish on the rips, and I'm not getting too bearish on the dips. I think it's going to be, as Jim Carson calls the summer of George. I can't say it's going to be a whole summer of that, but I do strongly believe it's going to be a whole month of that. The rest of June, it's going to be boring.
You know what? That fits my thesis as well. So we're clearly going to be wrong.
It's good to be back, Patrick. It's good to be back.
Absolutely. So let's move on to the dollar. I want to talk some different sectors, but let's quickly go through the macro markets here.
You must be you must have had a shitty week. Shitty month, having to watch your beloved dollar go down.
I
know you're right, because listen, I get it. You pivoted, and you're actually good at pivoting, and you're not truly you're like when I go long bonds. I'll do it occasionally, but I feel dirty doing it, and that's with you with the dollar.
First of all, I haven't been short the dollar. Let's put it this way. But I have been.
Must break your heart though.
No. To be honest, it actually fits very well because I at heart am much more of a commodity bull, and a weak dollar period is actually a tailwind. So I'm not going to be trading the currency, but I'll be certainly taking all the tailwind on all my commodity positioning that comes from that. And
got it.
And so that from that perspective, the dollar can go down all at once if it keeps my commodities ripping. The interesting thing is we're now at a previous low. So when we tested this 50-day moving average over here, that was also a Fibonacci retrace. And so at this stage, the prevailing downtrend is still the one that is clearly in place. Now, that measures all the way down to the 95 level, but we're so oversold on the dollar from the last 5 months that there's at least a reasonable chance that we are going to be far more range bound on the dollar, almost in the same way that the stock market is likely to be range bound on the upper side. I still think there's a reasonable chance that the dollar grinds here until some bigger trend catalyst comes out in the second half of the year to drive its next major move. And so while we're down here at these lows, while I'm not bullish the dollar, I also I don't think this is the point where the dollar is about to make the big breakdown move for the next leg. And so I'm counting that this is going to be far more of a trade range here. Any conviction?
That could be. I think that the next real move lower in the dollar will be when the U.S. economy rolls over.
Yeah.
And that'll be it. So, and I don't know how to time that. I don't know if it's this month, next quarter, even the following quarter. But it's going to come, and at that point, the dollar will be sold aggressively. I don't disagree. I have trouble arguing with you that we go sideways as we wait for that to occur.
And you could see here, when you look at the U.S. dollar against the yen, retested the lows, trying to get back toward that 50-day moving average. It's just quiet. It's a quiet market here. There's been a lack of trend, and that may be the theme for going into the summer. Now, the second half of the year, I think, can be pretty wild, but going into the summer, I think that this is going to be not only in the stock markets, but also in the currency markets. Things are going to be quiet here for the next little bit, is my starting base case.
Well, so I agree with you on the next month. I'm not as confident about July and August. And I remember lots of summers where everyone leaves and then just stuff goes like bananas. And so I'm not ruling out that could be some low liquidity major moves in the summer. I just don't think it's in June.
There you go. So let's talk about what is interesting in the commodity markets. And we got to talk precious metals right off the bat. And now gold today had a down day, down 42, has not been able to beat its previous highs. But that really isn't the tale of what's been happening in the last week or two, which has essentially been that the other precious metals have all woken up. And so while gold here has got some overhead resistance and has not really been making any big moves, you when we look here on silver, what a breakout this has
Yeah.
had in the last week.
Do you know why?
And
Like a lot of people
no,
were asking why. Nobody really seems to know why.
oh, I feel like it held, at least technically, it held very well during its consolidation period. Usually, when it's a very when there's a lack of momentum, they'll deeply mean revert into fib retracements, like a 50 or 61% retracement. This consolidated sideways, and then once that overbought condition unwound, it just acted like a springboard to launch. But the interesting part was that silver broke out the same time as the other precious metals, like platinum and palladium, which means that it wasn't just a silver story.
Oh,
So if you look here, look at the way platinum
oh
blasted off.
shoot. I missed this.
Yeah, like
Well, okay, so Patrick, are we too late? Can I get aboard or is it too
uh,
late?
well, it's too late for a daily chart entry, like as in that, you don't go and buy it after two rip days like this. You buy dips, right? But if you look on a weekly chart and you really step back, like there's a this thing is really just beginning if this is going to start a new move. So it's all about time frame. If you've got a 6 month time frame, there's still lots of upside on this move. It's just on a daily chart basis, I'm waiting for dips to buy more at this stage. Like at this stage, we could easily see a pullback to 1100 on a dip. And that, so if you have like 100 point pullback or a 50, 60 point pullback, then you buy dips. But
Okay.
this is definitely a big breakout, and even palladium has gotten above the 1,000 level, even though uh, even though it's not moving as much as platinum. But you definitely have a breakout out of an extended consolidation phase. So, point being here is that the entire precious metals market that was inactive while gold was running for the last 6 months suddenly has all blasted off, and now gold isn't moving, but all the other ones are.
Oh, that's fascinating.
And what's interesting about it is like even some of the individual names, like let's use SBSW, which was the Stillwater, which is the platinum story, right? This thing was dead in the water for half a year, almost a year, and this thing is just blasted off. And when you put it on a weekly chart, this thing is still, like, it went from $20 down to 3. I mean, fine, it's gone from 3 to 6, but there's still, if this is the beginning of a new breakout in the stage, this is still early innings of a new bull trend that is emerging here.
Got it.
And so this is the interesting part. Gold is getting heavy, tired a little bit, but precious metals are awake and running. And silver, like look at for instance, AG, like First Majestic Silver, like the silver stocks, which have been left behind when the gold miners like GDX were running, but suddenly the silver stocks are all on fire. This entire space has been playing catch up. So nonetheless, precious metals very active, and I think there's lots of opportunities still. Obviously, I like buying dips. I can keep. I'm not going to go and buy along these highs, but we've been long these, and it's been a pretty good run in the last couple of weeks.
Well done.
The So the next thing, though, let's talk crude oil. And I've been pretty bullish oil with my members for the last couple weeks. I did even a YouTube thing on it for anyone who follows the YouTube channel. The interesting part here is that this is a pretty classic double bottom. So you had a very typical zigzagging kind of correction down. It goes, creates a double bottom, and then creates a bull flag consolidating right below the 50-day. And this is literally the first bullish attempt to close above the 50-day moving average that we have seen in months. Now, there was an attempt back in March, April to break above the 50-day moving average, and it was a false start breakout. And here we are again. So is this the beginning of a counter trend move? And my entire thesis has been essentially that there doesn't need to be a fundamental reason. The sentiment is so decisively negative that a short squeeze, laugh it up, buddy.
No, I'm just laughing because is there ever a fundamental reason for I'm sorry.
No, but the point being that the short squeezes are liquidity driven.
No, I know. I'm just Patrick just get
yeah. Okay, I know. Yeah, you got me riled up. Okay, that's it. But the point is that last time we had a short squeeze, oil ripped 10 to $12, and there was no real reason behind it other than
I hear what you're saying. That there's no real. No, I get what you're saying. You're arguing, and I don't mean to pick on you, but it's been a while.
Oh, we're having. No, I would expect.
Yeah, you expect nothing less. But what you're arguing is that we could have a situation where even if fundamentals look terrible and all the fundamentalists are talking about how bad it is, we could still rally based upon positioning.
Yeah.
Right.
And that's literally all my entire thesis.
Listen, I'm with you because everyone hates it. It is the most hated thing. It's like the Don Cox thing. Those who know it best love it least because they've been burned the worst. They're all short. Nobody thinks it's going up. There's just joke after joke about how only goes down. One of these days it's going to turn and it's going to fly. And I still think that the part that people are missing, and I go and I watch Paul Sankey because I think he's the best crude analyst out there. And even though he's bearish, I kind of think in the back of my mind, I interviewed him and I said, what would it take for you to get bullish? He says that really the next bull move will be created by the shale supply decreasing. And that'll happen just out of the blue. All of a sudden we'll turn around and the shale won't be producing the supply and the thing will go, and it'll only be obvious in hindsight that had happened.
There you go. I like it. It's definitely a possibility, but I almost feel like that would be a structural thing that appears once oil is already well off of its lows. Right here, if we get a technical move on oil that goes to 70 to $74 on the upside, then once a squeeze finishes, it'll come right back to the mid 60s very easily. Like you would. If there's no fundamental reason for it to be up there, once the squeeze is over, it's going to mean revert. But then when it's consolidating there, that's when it's most vulnerable, or at least for the bulls, it's most favorable for some kind of a headline like that to shift the fundamentals, and then suddenly the whole thing turns into a bull market. Now, I'm not ready to jump onto that bandwagon yet. Right now, I'm just looking for the squeeze. But we will then, once we see it settle down into the summer, we'll find out what the next move or catalyst is. The other thing that was interesting is, sorry, go make your point.
Are you going to move off of energy?
I was going to go to nat gas, but do you want to finish something on energy?
I want to finish. I need to know what's happening in the podcast you cheat with me on.
Wow. Bullish uranium and not so much of a mention on energy.
Okay, we're good. We're good. Thanks for the update.
Okay, so let's talk nat gas. The interesting here. Okay, so I'm gonna just use the 12-month strip with the UNL, the one that I like to track, just to get a better gauge as to the trends. And we've been in this 2 to 3 month consolidation in nat gas prices. But I'm going to use this nice thick crayon line right over here and that 50-day moving average. And we have nat gas attempting to actually break out. Now, I say attempting because it hasn't really broken out yet. But this is actually a really interesting moment to watch whether this 3-month correction is over and whether nat gas actually wakes up here for another leg higher. And so I'm watching here to see whether this thing breaks out and gets a new move underway. What are your thoughts here on nat gas?
You know me. I'm always like hoping that this is the final point where the bull market resumes, and we're actually going to get a exciting bull market in nat gas. Because when they come, Patrick, they're crazy.
Yeah.
Like we haven't had a real exciting nat gas bull market since optionsellers.com.
Literally, I was going to say the same thing. Jinx. But we need someone offside like option seller to create the action.
I bet you
the widowmaker trade.
Back. I bet
the widowmaker trade has basically made so many widows that there's no one left.
He's probably trading crypto. Let's face it.
All right, but anyway, nat gas is it'll be very interesting to see. What's interesting is that as well, many of the nat gas stocks have been able to diverge from correlation to the broader energy basket. Often, they would get basketed into an energy basket and correlate. But really, I'm going to use EQT just to pick one. But EQT has been along its 52-week highs versus so many energy stocks are near their 52-week lows. And so the nat gas story really has been able to march to the beat of its own drum. And continues to actually, on many of these types of equities, still set up for bull continuation patterns. Primary trends are still strong, and it'll be interesting to see whether they can continue. I still think that the bull trend is intact, and you can stay long many of these nat gas stories like LNG, Range Resources. All of these names still are behaving very well.
Got
it. So let's talk uranium. I wanted to pick your brain on this. No. Listen,
because your other show doesn't talk about uranium enough.
No, it doesn't. But what's interesting is obviously there's lots of headlines, and they've driven the uranium. I'm going to use URA. Driven a huge bull run in uranium equities. They've just ripped on the upside. But the obviously very illiquid spot prices of yellowcake through ETFs like let's say the yellowcake one YCA or the Sprott Physical. We just have not seen uranium itself start to participate. I'm going to just use the Sprott here. And so you have this huge rip occurring in the equities. And to me, that's obviously a divergence. You would think that either one is going to catch up to the other. Like, in other words, the uranium prices will inevitably, even though they're liquid now, inevitably start to reflect these fundamentals that the companies are pricing in, or the companies are priced way too enthusiastically and will mean revert. Like, what's your which one is the one that gives?
Okay, so the other day I was out with the Uranium Whisperer, and no, that's not copying like this. I actually
have a uranium. You have a
I actually
uranium
have
whisperer,
a uranium whisperer. He
hasn't come on to the other show that
no, he won't go on shows, but he literally owns like a uranium mine, like one of these little uranium mines, and he made a fortune in the last cycle, and he still follows it, and he still owns this, like one of the little ones. He was telling me, because I've been out of touch for a little bit and I haven't really had a chance to get caught up on markets. He was explaining to me that the uranium, the contract market is quite firm, meaning like what these companies are selling because most of them don't deal in spot, Patrick. Most of these companies sell in the contract market forward. And he was saying that that's quite firm, and it's only spot that's having any trouble. And so the reality is that what you're seeing here is you're seeing spot get into trouble, but the contract market staying just firm and staying bid, and lots of deals going on. And that's why the stocks, the equities themselves, are doing so much better. His opinion is that spot will go back up. And, the problem is it's a hedge fund hotel. Too many people in this world own the spot because they didn't trust the companies, and it's just a liquidity thing, and eventually it will trade closer to term, and when that happens, the U.UN will go back up. So am I excited about U.UN? No, but do I think that it could play a little catch up here versus um the term, and also versus the equities? Yes.
Well, there you go. That was what I wanted to corner you to get an opinion, and you
You can
didn't give
thank
me an opinion. You
can
gave
thank
the
you was lucky.
exactly
I just went out with the Uranium Whisperer last night, so it was lucky.
very
Perfect timing.
perfect timing. So the next thing I wanted to talk about is the ags,
Okay. Oh,
and
nice.
what I wanted to just touch on here. First of all, let's just quickly go through the commodities themselves. Corn has been kind of grinding it. Soybean actually looks like it's actually a bull flag continuation. This could actually work higher. And wheat trying to get off of its lows, but still stuck down there. Overall, the grain markets are still a little bit quiet. It doesn't mean that they can't get active, but this has not been a buzzing market. But what's crazy is that the ag stocks themselves have been ripping in the last 2 months, right? Off of that low, whether it's Nutrien or Mosaic or these types of names, there's been a rip to the upside that's just been an extraordinary go, and they haven't given an inch back on there. Like these ag stocks are back, and I don't really understand what is if there's an actual reason behind it. Obviously, technically, it's a beautiful trend, but do you think that we're seeing this pivoting into a more sustained bull market on these ag stories?
Well, do we need to know any more than it's a good looking chart?
Well,
Do you remember when Mark Minervi or whatever was on TV and they asked him what Upwork does? And he's like,
yeah,
I can't hear you. I can't hear you all of a sudden.
yeah.
And instead, what he should have said, and he would have been a friggin' hero. He would have been a hero if he had just said, I got no fucking clue, but the chart looks awesome.
Well,
Right? So, like, do you need to know
absolutely.
any more than it's a good looking chart, Patrick?
Well, but you know what? It's a good looking chart on only a 2 month basis. Like here, I just zoomed out to look at the 3 year chart, and you could see this devastating bear market that's been going on in these ags, and that's the interesting part. Like,
Yeah.
is the 3 year bear market over? I mean, if it is, this is not even the end of the first inning. Like
Yeah.
if this is an actual turn point, this is the beginning of something new here. To me, the real tell is always not about the rip, but about the dip. Because if the dip is bought and if the price action is defended and moving averages are held, it's showing that that big money is accumulating dips. And if that's the case, then that's your real tell
Yeah.
that a new bull phase is underway. And so I think this summer at some stage, we're going to get this rally in advance checked. And that's going to be what the real moment we're going to find out whether this is something more legit.
So my initial gut reaction, Patrick, is that Nutrien doesn't need to go with the commodities themselves. You can have a bull
Obviously,
market
because
in those without the actual commodities going. That would be
they're
kind of
not
my
farmers, they're the ag business, right? Like they're fertilizers and stuff, and
right.
it's not
Like
they're not sensitive to the price of wheat
it's
itself, right?
different, and there's lots of
Yeah,
different things. So I would say that it's two different trades, and that there's a lot of reasons why I think resource companies in general are being bought throughout the world. It's been a change in attitude. It's been a
yeah,
change out of the US into other companies. I think you could even just argue the fact that, like, just look at Canada. There's been a huge outperformance in terms of owning Canada over the US. And one of the companies in there is Nutrien. And when you're looking for liquidity, it's in there and it gets bought. So some of these
yeah. But like,
stocks,
look, okay, but like a Mosaic had
yeah,
an
okay,
epic
fair
run as
enough.
well, right?
But
Like
I
it's
just
not
think though
it's
it's a function of what people have owned, and as people have started to shift out of things, they're going to buy other things, and you'll sit and you'll get these moves and you'll be like, that makes no sense. And the reality is that you've been sitting there and that stock has been cheap for years. And it just now all of a sudden, because people are finally willing to entertain the idea that owning Mag 7 isn't the greatest thing in the world and that there's other stocks out there, some of these stocks are going to start to take off, and there's going to be no real reason except that they were cheap for too long. Yeah. And I'm not sure if this is an example, but I do think that increasingly you will see that phenomenon play out.
There you go.
Because it's just the other ones are just so big, Patrick. Like they're so large in terms of their market cap. Like one of my buddies had a chart that he included the other day in his he has a letter he sends to his clients, and it was just the most unbelievable chart. Let me see if I can grab it here. It showed the market cap of the top 7 stocks. Yeah, here it is. It's from Schroders. It showed the market cap of Tesla, Meta, Alphabet, Amazon, Nvidia, Microsoft, and Apple. And then within the MSCI All World Index, that works out to 18% or something like that. Then he added up all of Japan, UK, China, Canada, and France, like all of them. Okay, within the All World Index, it was less than those 7 stocks.
It's insane. It's insane.
Yeah, it's crazy. So the reality is that as money comes out of those 7 stocks, they're going to push some of these other stocks, and there's not the same sort of liquidity. And we're going to see more and more crazy moves that just go, and we're all going to be scratching our heads going, why now? And why so aggressive? And it's going to be nothing more than money is looking for a way to rotate.
To hide.
Yeah.
Well, you know what? I want to actually talk about some of these international indices in a second, but we'll get there in a moment. What I want to do is one last thing I wanted to touch on in the commodity space, and that's the not so rare earths, the REMX here.
By the way, it's funny. The Uranium Whisperer last night, we were chatting in a group, and he actually said the same thing, and I don't think he got it from me. He goes, "Rare earths, they're not rare." Like it's like.
There you go. What we've seen was a pretty nasty 3-year bear market. There's been actually a lot of these commodities, whether ags and other things, that have all been in this 3-year bear market since peaking out in 2022. And like this went from $125 down to 35. It's been an ugly rout. And what's interesting is that we now are seeing it didn't make a lower low. You can take a nice thick crayon line along all these highs, that 50-day moving average in there. Just curious. I'm not going to stick my neck out to say like I know that this is going to be the beginning, but this is quietly no one's paying attention, and it's one of these things that maybe we might see a bottom form here, and maybe this entire space starts waking up. And this is sort of one of these things that I'm keeping a close eye on my watch list. I don't have any skin in the game yet on this. But if this starts behaving well, this might be an interesting place to bottom fish.
Patrick, this is something you do so well, and I completely agree with you. One of the things, rare earths might not be rare, but unfortunately, with the geopolitical problems that we are having with other nations, it's going to increasingly be that we have to start doing some of these ourselves. And maybe you're right. Maybe this does get a bid, and we do find some of these companies taking off, and you're probably the only guy on Wall Street, Bay Street, any street that's looking at this thing. So good for you, and we look forward to getting the signal, the bat signal when we should buy the rare earths.
There you go. So let's talk about bonds for a little bit. Okay, so first let's start with SOFR. So SOFR broke down. Clearly, the jobs numbers are pulling rate cuts out, right? Like the allowing the Fed to be a little bit more hawkish, all these dovish scenarios being pulled out. Look, the SOFRs are going to swing around. They'll take 25 basis points out here and there. I don't know if we really need to overthink this, but what did break down was the long end, and And this is one of those things that is right down your alley, because you are quite the perma bear on when it comes to the long bond, and this chart has been awful ever since the basis trade cracked this thing back in April.
No, the
The
basis trade did not crack it. But anyways, go on. Keep
Well,
going.
no, but I mean, well, look, this red candle was that. Okay, maybe it wasn't
The
the
basis
basis trade.
trade is there's nothing wrong with the basis trade. Everything is fine. Everyone's worry about it is
I'm just
overstated.
saying that was the date that corresponded with this red candle. Okay, like I'm not going to try and make
It
a
was
correlation
actually the
for a fun.
swap spread trade that was actually more of a problem than the basis
Yeah.
trade. But
Okay.
anyways, go on. I just don't want to.
But
Okay,
point is okay. No, okay. I thank you for the
we're
clarity,
gonna
because
lose our cred with the fixed income community if we start,
okay.
parroting the zero hedge
I
story.
had no credit. I had no credit with them in the first place. So, like, they're only listening for you. The point though is that the uh, the chart has been viciously bearish, in a sense that every rally has faded in the most classic technical form. There's been absolutely nothing that I could say bullish about this chart. It's ugly. The only thing that was going for the long bond was that it's at a major support. Now, the long bond itself on the charts has not reached the 2023 low, but the yields have. I mean, the yields have gone up to like that 510 or wherever it was on the 30-year. That was the major overhead resistance level. The thing is that there's people that are bearish bonds. There's people that are worried about it, but this is a chart that if this flagging formation goes, you've got yourself a move where the long bond could head down to 108 or 107 on the downside, but that would be a technical breakdown of these lows. And the thing is, to me, while there are certainly bond traders out there that are bearish, the thing is the market doesn't seem to care about this. And what I wanted to pick your brain on, is this that one thing that could actually spill into the equity markets and cause equity markets to have a pullback if we start seeing the yield explosion on the long bond to a fresh new like multi-year high, where suddenly everyone starts getting nervous about this kind of big beautiful bill, or whatever types of drivers are causing this bond to sell. But do you think that this is one of those things where no one's worried about it until everyone worries about it all at once?
Yes. Like I think that the market is extremely complacent about what's happening in the bond market and what's happening with the deficit. And I know that seems strange from me, somebody that is generally being willing to run higher deficits than some others. This is a new level of insanity. What's going on? This idea that we're going to continue spending. The U.S. was already miles ahead of everyone else in terms of their deficit. They needed to get it in. This big, beautiful bill did nothing of the sorts. I think that the bond market is hanging in here because they keep hoping that it's not going to be put through. But if it is put through, I think the bond market goes no bid, and it ends up being the kind of, as Bill Fleckenstein says, that people, the politicians will keep spending until the bond market takes away the keys, and we're getting closer to the point when the bond market is going to take away the keys. And I'm shocked at how many people, yes, continue to be long bonds. And I know that there's some within the FinTwit community and some kind of, let's just say, faster money guys that are short bonds. But when I look at the sentiment and I look at what's happening with the commitment of traders reports, it's still very much everyone's still long, and there's been no real panic on this yet. And so I share all your concerns about the bond market just going down in a whoosh. And in terms of, does that bring down the stock market? I think why it happens is going to be really important, Patrick. I don't think enough coverage has been given to the fact that we had a very unusual situation in the past month. I can't remember when it was because it's it's been a tough month for me. So um, there was a situation when the bond market was going down, the stock market was going down, and the U.S. dollar was going down.
Yeah.
That is not something that happens usually in the U.S.
It does not. It does
Right?
not at
Like
all. That from an
sometimes
intermarket relationship perspective, that is
yeah,
very rare.
because
That
usually when you get a risk off situation and stocks are going down and maybe bonds are going down, but at least the dollar's going up because credit is being destroyed and we have a situation where the dollar's bid. It is so extremely rare to have all three going down. And I think that signal that the market was sending when that happened is being glossed over by too many market participants. And what I think that signaled was the capital was leaving the US.
yeah.
And I think that it could come back in a heartbeat. And I think that was the shot across the bow. And that when I worry about like the really scary scenario, that's it. Because what do you do? Like, how do you fix that if you're the government or you're the Fed when all
Yeah.
three are going down? It's hard. Like,
Yeah.
you buy more and it just causes the dollar to go down more. Like we're in this
Well,
strange situation where the risks are being underappreciated in the bond market.
well.
And like
So
I think,
if
sorry, go
if
ahead.
I can offer you just a pure technical observation as
Yeah.
opposed to because you're driving a real kind of fundamental point, but this reversal that happened in the last 2 days, particularly on this jobs number, it rejected right in the Fibonacci zone, right at the 50-day moving average. That makes this entire rally that we had in the last 2 weeks just a retracement. And therefore, this breakdown candle could be the start of a continuation pattern, which is this breakdown is a here and now problem. Like, as in next week, if that inflation number in any way boogeymans the bonds, we could actually have the breakout in the 30-year yield next week.
Yeah.
And so this is an immediate technical risk. And so this is not something that could happen in the next month or two. This is a real risk of a breakdown immediately. And so this is something all of our listeners should be watching going into next week.
Okay. Well, there you go.
Right?
I'm
Like
not as smart, and you'd be proud of me though, Patrick. Long 1 year puts for me, baby. That's how I'm doing it. I can't
keep it
time it.
simple.
I could
Keep it
time it if I
simple.
listened to you all the time, but unfortunately, I've been missing you, and then I haven't had a chance to time it as well with you. So
Come on,
maybe
you've
I'll add a
never
little bit of.
listened, but you've never listened at any point. So this is
That is not true. I listen all the time. Like for
oh
example, I'm going to go and
whatever.
I think no. I honestly think that your platinum and your silver and your palladium insights was truly like worth slugging through all your rest of your bad takes.
Fuck you. All right. Anyway,
I'm sorry. I actually
yeah,
really
no,
do. I do appreciate you bringing those to my attention. I miss
yeah.
those, and I'm kicking myself because I've been wanting to buy platinum. It's one of those things. It's kind of like uranium 5 years ago. It's trading below the cost of production or very close. That it was going higher. I should have just like waited for you to tell me, when it's perking up technically, and then just gone along with it. And all your members that you got them in that, good for them because that was great, and I missed it. So great job.
There you go. So listen, I want to talk global equity for a second.
Okay.
And I will do this a little quicker because I don't want to drag this on too long. But overall, a weak dollar, at least from a traditional intermarket perspective, is generally good for emerging markets. Usually weak dollars is an environment that they do well. And what's interesting is that when we obviously the Nikkei and the Euro stock have been more or less kind of correlating to U.S. equity. Like they're not diverging in any way. More or less, they're in the same direction. But what's interesting is when we go and look at some of these other plays. Like for instance, this is India and the Sensex, and this is a bull flag continuation pattern. If this breaks out to a fresh high here, then we might have India make a go at the upside here with a brand new breakout. You then take a look at like the Kospi. Look at South Korea running. Like it's just a complete bull phase breakout here on the upside. And then you take a look at one that you've touched on in years past is Mexico. Mexico went through like a 1 year bear market, and suddenly it's been behaving very well for the last 2 months. It's broken out. It's not even given a dip to be bought on the downside. And so you take Brazil. This looks like a bull flag continuation. If this holds the 50-day and this flag just the way India, we might have a bull breakout in Brazil on the upside. So there's a lot of really interesting emerging market trades. Even Argentina has been pulling back in the last few days. Those there's that technical thing of where what were previous highs act as support after breaking out to a fresh new high. This is, I always say I buy dips, not rips. Well, this is a dip in Argentina straight into a technical support area. It'll be really interesting to see whether the Latin American plays and other emerging markets begin trending here.
I got it. I love Brazil. That's for me. Yeah. That's my pick.
Well, you know what? It's interesting. There's a couple names. Like, do you play like PBR or Valet or any of these?
So you
just buy the indice?
Nah. So Cuppy gave me some names, Cuppy and the boys. So I had some crazy names that I was owning, and I made a basket of crazy names that I had no clue about. To be honest, they did well. And now I love the currency. I love owning the real. I love it. Carries well. Doing well. I love it.
It was the other thing we could just touch on, which was really interesting is, and I'd love to know if you have a theory behind it. But obviously, Europe has been doing very well, and so when we take a look here, this is the Euro stock holding up along its 52-week highs, consolidating above its 50-day. This could be a bull breakout, but this is reflective of the way the German and French markets have been behaving. But when you go and look at the smaller European stock markets, they've been on fire. Like, for instance, this is the chart on Spain. After that April dip, the thing goes ripping on a full new leg higher. Italy, look at the rip in the last couple months just to the upside after beating the March high. Look at Greece. Look at the way it's ripping on the upside. And so while Europe has been doing well on the Euro Stock 50, when you're going to those smaller European stock markets, they're on fire. Like, what's the do you have a reason why you think that that's happening?
Yeah, I think it's a liquidity thing. And so the money is coming back in a real way, Patrick. Like, it's real money that's coming back. And it's like institutional money. And it's coming back, and it's like buy me. It's not just like, don't put me just in the 50, Euro Stocks 50, put me in all of them. And when they go to buy these other markets, they're moving them. I was listening to Michael Semblas the other day from Morgan Stanley, and he was on some other podcast. And I was listening to him, and he was talking about different markets and liquidity. And he was saying, well, I can't really buy Brazil. It's too small. I was like, what? It was kind of shocking to hear him talk about the fact that he has liquidity issues. So, and the fact that Brazil was too small, so he doesn't bother doing it. It was something like that. And my point is that when these guys come for it, they might just stick it in that's him, and he's a huge money manager. But somebody kind of an order of magnitude smaller might say, okay, buy me all of the markets. And so when he goes to buy the Euro Stocks 50, he has no problem buying that, but he's really buying 300 stocks or 500 stocks or whatever the number is, and he's pushing those other ones way higher. By the way, Patrick, one of the things, if we're going to talk stocks, one of the most interesting developments of the last month, in my opinion, has been the dramatic difference in the positioning, attitude, and trading of retail versus institutional. And it's been shocking. I've had some charts that I've included in my package that have showed how much institutions sold the dip and refused to buy back and are still underweight. I think that is like, I think that they're most institutional traders are leaning underweight / short or not as long as they should be. Meanwhile, retail sits there and just gobbles it up. And the amount of buying from retail is just through the moon. And somebody highlighted the fact that there's a Bob Farrell, who is a famed strategist at Merrill Lynch, I believe. I think it's Merrill Lynch, maybe somewhere.
Yeah, we've reviewed his rules before.
It's awesome. And he says the public buys the most at the top, sells the most at the bottom. And to me, as much as a lot of retail kind of cheerleaders have been saying, "Oh, look, the retail's won again. The institutional guys are a bunch of mopes," and as we go to new highs, and they're cheerleading all this, and I'm more worried than they are. And I still go back to the thing, and I don't know if I've talked about it publicly on our show, but I definitely wrote about it, and I think you and I have spoken about it. When we got that dip, I highlighted the fact that in 2007, Kramer had his "they know nothing" rant, which was just like his crazy rant where he starts talking about how the Fed's clueless, they don't know anything, and there's all this problems. And in my mind, that was always at the tail end of the bear market in 2007 or 2008. But when you actually go look at it, it's shockingly on the first dip. It's crazy. Yeah. He made this rant that was famous. And in my mind, it was like he missed the whole move. So he made this rant. Stock market was down 10% or something. First 10%. It then went down another 2%. So it was down 12 or 13. It then from there, that was early 2007. It rallied to new all-time highs. And I know you've done this. You pointed this out numerous times where you've showed us in 2007, it's rallied to new highs. And then we proceeded to lose 40%. To me, it looks like we're kind of setting up a similar type situation. And I don't know where we're going to roll over. And I don't know
what the catalyst is.
But one second, but I'm just like, when the retail tells me they won, I'm like, fine. If you're day trading and stuff like that, you've won. Let's see where we are in a year's time. And then we'll see if you won. And that if this was a smart rally to buy.
Well, historically, the Fed is even though Trump has now owned this too late Powell name in there, but historically, the Fed has a long history of taking too long to start cutting, and something inevitably breaks that forces the Fed to act. And I'm curious whether we're going to have a repeat of that cycle where Powell continues to keep things tight, and then inevitably it's that one thing we don't know, that one thing that that it is something brewing within that hasn't yet emerged. Rarely will the stock market have another event about something that we already are talking about. The market usually needs something to surprise it. And the question is the second half of the year have a surprise for us that we don't know what it is? And it's going to cause the Fed to have to pivot and in that manner. And I'm just offering it as a kind of an idea to fit your thesis, which is we don't really know what it is, but when everyone's cocky like that, it's when the market delivers a surprise that you didn't see coming that basically once again catches everyone off guard.
Can I put on the record my guess?
Sure.
Private equity.
Yeah, you've been saying that for months.
I know. I'm going to stick with it though.
All right. I like it. I like it though. All right. A couple of things and we'll wrap. First of all, Tesla. Unbelievable. Grab some popcorn and enjoy the show. The fact that this spat has made this kind of an impact on the stock and is crazy. Do you think they kiss and make up and the stock rips back up, or you think that this is this spat is as a divorce that
They're figuring out what to do with the kids.
yes,
So first of all, I feel like I've traded Tesla so bad, as I've told everyone. I have
no credibility here.
lost all privileges in terms of calling the stock market, like calling the stock. So I won't try to tell you that. I will say that what I do think is interesting about this is that if you think about Trump and you think about Elon in terms of how they've handled their public persona and like how they communicate with the public, they both had a huge advantage by willing to do things out of the box, right? Like Trump, makes fun of people. He does crazy stuff that any political strategist would like be saying, don't do that, don't do that, don't do that. And that has been the source of his success, willingness to do crazy things. Same with Elon. Elon does crazy shit. He gets high and bids for companies. He does just absolutely insane stuff. And what it was interesting was I don't think we've ever seen either one of those guys go up against somebody that was equally as crazy and willing to do stuff. And I think that's why it deteriorated so quickly, right? Like it just like boom, boom, boom. Like it was going by the hour, right? Like it was just going by the hour. And I think that they were smart to just stop because it was just mutually assured destruction between the two of them, right? Like there was no winning at that point. Like they should just do it privately. Like they should just DM each other and yell at each other, because doing it publicly was just making things worse. In terms of saying where we're going to go, I don't know, Patrick. Like I think for one, I think Elon is underestimating the power Trump has. I think that although you could argue that Elon's got a lot of power in terms of his platform and things like that, at the end of the day, Trump can do SEC, he can do FBI, he can go and change contracts. There's a million things that he can do to make Elon's life really, really miserable. And all of the things that Elon can do center around trying to get Trump out of office. And I'm not sure that he's actually able to do that. Like, what was that? He tried to influence some election in Wisconsin or something, or I'm not sure what it was. And it didn't work. So there's only so much you can do with money. And like, if you look at this favorability ratings, Trump is way higher than Elon. Like nobody likes Elon. So I kind of, when I'm thinking about the stock, I think that Elon should be very careful. Like there is, I'm not saying it's going to happen.
What you think he should do? The question is what's more important is
what he will do.
What,
I don't know.
Like,
is he going to get high and like do some crazy stuff? Who knows? I have no clue. I really don't know. I just know that the risk.
I think yesterday's drop in the markets has given him a wake up call that there are consequences to his actions. And I think he's going to, step back and just let cooler heads prevail for him. And I think things are going to quiet down here. Is my opinion.
Okay, could be. I'm not saying you're wrong. Could be a big Saturday night though. Lots of ketamine, and like next thing you know, it's like I'm going to send off a couple of tweets, and it just goes downhill from there.
Okay, so one last thing I want to cover, and then we're going to wrap. Okay.
Yeah.
Last thing is I want to talk about the pharmaceuticals. And the interesting thing is, okay, so here's the XLV. We can also talk about biotechs as well in the same breath. So the healthcare, have been in an awful bear market, driven by obviously concerns about how much power Maha will kind of impose in terms of hurting their profitability and all sorts of other variables like this. But the question is, has it now been baked into the cake? Have we seen, or are we seeing potentially one of these things like sell the rumor and then buy the news kind of event, where this much of the worst case scenarios are now baked in, and they're simply not going to impose draconian things onto these companies, and at some point these will get bought. Like, look at this IBB chart as well. And like, it stopped making lower lows. This is the first time it got back above the 50-day moving average since the start of the year, where it briefly tried to get above there. Point here is that we're seeing them slowly turning off their worst levels, and the question is the worst behind it for this space?
Patrick, I have no clue. I haven't been paying attention, but I appreciate you highlighting the fact that the IBB chart is perking up. I'm going to put it on my watch list, baby.
Yeah. The biotechs have quietly already turned up. The healthcare is dragged down by the UNH, but we'll see. We'll see how it settles in. All right, that's all I got.
That's awesome. Let's wrap. Patrick, it's really nice being back with you, buddy. I really needed this. I really appreciate it. It was a lot of fun. Thanks for everyone for tuning in. Patrick, if you want to learn more about Patrick's great calls, where can they find you?
Find me at bigpicturetrading.com. Where can they find you, Kev?
They go check out macrotours.com and listen. Bear market, bull market, we're just happy to spend some time together on this crazy ride. Now stick around for the after show. Now, all right, Patrick, I say where can they find you? What I was going to say is in Maranello, hanging around
Maranello, Italy.
Are you going to get in there, Daniel?
Yeah, I'm here.
There he is.
Yeah,
there
Daniel's already here with me.
We need him there for like the up the good-looking quotient rule.
Absolutely.
Value. So your boss dragged you to Maranello to go race some Ferraris?
Yeah.
Life's rough, eh, bud?
It is. Yeah.
He's trying to tell me he's complaining about driving all day. He's like, I have to drive all day and all this complaining. Then I find out where he's going. I'm like, I think I'll drive all day for there. I'd drive across the ocean for that.
No, it's cool. We have actually our mastermind out here in Italy.
Yeah.
And so all of we brought out all our inner circle members out here. So there's going to be we're all going to be going for a big tour of the Ferrari headquarters.
Okay.
We're going to test drive a whole bunch of Ferraris. It's going to be awesome. It's going to be a great
wild
day.
That is wild.
Yeah.
Though unfortunately, they're all paddles now, right? Like you won't be able to. The Ferrari's given up on anything stick, right?
I'll report back. I think
they've given up on everything stick. I think it's all paddles because they're like a true racing thing. Wonder if they'll let you drive something old with a stick though. Tell me you want to drive the Magnum PI one, which is, by the way, one of the slowest car Ferraris ever built.
I'll take that one.
You'll take that one? I'd take it too. Pretty awesome looking not the Miami Vice, the Magnum PI one.
Yeah.
Okay.
Yeah.
Well, listen, we all want picks. Pixar didn't happen, baby.
Oh, absolutely. We'll report back on how the day went. But we're gonna go do wine country touring and all sorts of stuff. It's gonna be it's gonna be a tough week.
Yeah. I'm gonna weed my garden. By the way, I realized that I interrupted and didn't let you guys rate your beer. So we got to keep the tradition alive here. What's your beer? Daniel, what do you think of your beer?
All right, Danny, you go first.
It's long gone.
I think it's shit. I don't like Moretti.
Yeah.
Sorry. I think it's shit.
We got to give a number. The shit is not a number.
I give it a 3 out of 10.
Oh my gosh.
And that's an amateur score. Like you got to give it the decimal.
It's not only is it a miserable score, it's amateur.
I don't really go under 5, so I'm gonna give it a 5.5.
You and I are Canadian. We don't have it. The Brits like fuck that. I'm like 3, maybe even 2. It's terrible.
Absolutely shocking.
All right, guys. Listen, I gotta go.
Okay.
Anyway, let's wrap it up.
Thanks, everyone.
Thanks, everyone.
Later.